Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It is October 22nd, and this will be our chart lesson for the day. And really, we spent most of the day in this really tight range here. This range is really, I'd call it 308 to 313, so it's about a 5 point range. So there's not going to be a lot of trend to trade here. Really, what you want to try to do on range days is get short off these highs and get long off these lows. The highs were relatively consistent up here today. Uh, we turned down off this level several times, and then we moved up a little bit, and this just kind of moved higher, and you can see, and then we turned down off this other level a few times. So this was pretty consistent today. The lows were not quite as consistent, although generally right around this 308 mark we were bouncing. And we had one failed break lower here. You could probably treat this as a failed break lower as well, but we failed lower here, so you got a nice bullish bar. I like to ride that one back, and you may get lucky, and it may be that failed low point of the day, and you may make a measured leg up. It didn't happen this time, but all the same, that's what you're hoping on doing. Same thing on the failure out the upside. You're hoping that you'll catch this move all the way down. And you actually would have if you caught this trade right here. You could have ridden this all the way down. So you get a nice runner here. Generally, on a range day like this, the only time I try to catch a runner is on the failed breakouts. Like if you can get one of these entries that fails on the breakout or one of these down here, that's where I like to catch a runner. And you would have had a runner on this one, matter of fact, right here too. So this is close enough to the highs after a breakout that you may attempt a runner. But generally, just buying these lows and selling these highs, you're not going to get many runners on them. It's not till you start to get the failures that break out and fail. And even if prices are going to break out and succeed, they're probably going to fail at first and come back and then reverse, just like they did here. You finally broke out, it fails and comes back and tests this breakout area and then goes lower. So you still generally will probably try to look to buy those breakout areas. Even if they're going to fail, you'll probably catch a quick, easy scalp, and you may catch an important high or low for the day. So that's what you need to remember. I had several people, it's amazing, I had several people today, they're getting confused on trends, running into trends, and which one to take. Forget about trends on days like this. This is a clear range. And the idea, what you always want to do is try to trade the dominant pattern. That's the one that's probably going to win out if you got two trends or two support resistant areas that merge. The one that's going to win out is probably the dominant pattern. So, and which is the dominant pattern is the range today. So this support, this resistance right here, and this support right here are going to be your dominant pattern. So even if you got a trend line like right here moving into this, you can still take those trades because they're going to win out. That pattern is going to win out most every time. So keep that in mind because it's just odd that I got multiple questions on that today, and really, people tend to overthink it. So once you know you're in a range like this, you're looking to get short up here and you're looking to get long down here. It's as simple as that. Obviously, use these trends to kind of give you an idea when it's going to end. But be careful getting long near the highs or getting short near the lows. And even in the middle, when it's this tight of range, be careful trying to get long in the middle because you may get burned because that's where you have more failures than anything in the middle. So just keep that in mind and always remember you're more interested in the dominant pattern. If you've got patterns that are converging, usually the dominant pattern will win out. So I hope that's clear. Like everything in trading, nothing is 100%, but generally that's what's going to happen. And if you play it that way, more times than not, you're going to be right. And that's the whole idea behind this. We want to put the odds on our side. We don't want to be just gambling and guessing. Gamblers do not make it in this business. Eventually they might get lucky a few times, but eventually they're going to lose their money and they're going to be out of it. So don't be a gambler. Don't even think about gambling. We want to put the odds on our side and that give us a distinct advantage. I mean, it's just basically how casinos operate. I think I've always heard this. I don't know a lot about gambling. I'm not a gambler, but Gambling is legal in Mississippi. We do have casinos here and sports betting, so I'm a little bit familiar with it. But uh, most casinos, I've always heard that in the casinos that the blackjack, uh, 21 or whatever you call it, is the game that gives you the best odds. And basically, the house has a 51% odds, and you've got 49%. But they still make money on just that 1%. And that's all they need is just a slight advantage. And they may lose 10 hands in a row, but in the long run, they win all the money with that 1% advantage. Now they have some games, I understand, where they get 60, 65, 70% advantage. And I don't know why anybody would try to play one of those, because the odds are against you. And if you keep playing long enough, you're going to give all your money to them. You might win occasionally, but trading is the same way, but we can put those odds far, far into our advantage. 70, 80, 90% to our advantage. And that's the idea behind all this. We don't want to be gamblers. Gamblers would be 50-50 or less. You know, you're just gambling then. You might get lucky and get it occasionally, but we don't want to be gamblers. We want the odds on our side, and we want to know that we're going to win most of the time. And so that's the idea behind playing these rules. These rules give us very distinct odds in our advantage. So I hope that's clear. Just remember that nothing's 100% in trading, and that's the thing that people tend to really miss. They think that everything works 100%, but it doesn't. And but we don't have to. It doesn't have to work 100%. We just have to understand that it works the majority of the time. 70, 80, maybe even 90% of the time if you get really good at reading this chart. So, and that's all you need. But you'd be surprised how many people just, they'll try this for a few weeks and they'll have a losing trade or two and they say, oh, this doesn't work, and they're on to the next thing. But nothing works 100%, and that's just the nature of the game. You're going to have losing trades in this business. It's part of the business. So, but the key is don't let it upset you. Just understand that's part of what we do. And majority of the time, when you get good at it, the majority of the time you're going to have winning trades, but you're going to still have losing trades. But they should be, you should have a lot less of those, and they should be small. The key is don't have any big losses. Make sure you follow that 2-point stop rule, and you won't ever have any big losses. That's the key to it. Don't have any big losses. It doesn't hurt you. You can always come back from 1 or 2 or even 3 losses in a row. But what you can't come back from is getting long up here and watching it come all the way down here and finally giving up right here right before it turns. And then, a lot of times you'll see people give up right here, and the next thing you know, it's right back here where it started. Don't ever get in that position. Don't take any big losses. Just if you're wrong, you're wrong. Take your hit and move on. And if you do that, you'll live to trade another day. But most people keep saying it'll come back, and they keep moving their stop all the way down. And just about the time they can't stand the pain anymore, it'll reverse and go right back where it started. So you just can't outguess this market when you're on your heels. Don't let the market get you on your heels. If you do take a loss or two, especially in a row, just get up and take a break or quit for the day. You'd be surprised if you just get up and walk away when you're having a bad moment or a bad trade or two. Get up and walk away, take a 15 or 20-minute break, and come back, and you'd be surprised. Actually, you'll probably be shocked at how much clearer everything looks, because you'll have cleared your mind, and you won't be so stressed and down on yourself, and you'll come back with a clear picture. And that's one of my main rules. If you have a couple of losers in a row, get up and take a break. If you don't even just quit for the day, get up and take a break. It's hard to quit, but the worst thing to do is try to keep trading after you've had a couple of losses, and next thing you know, you're trying to get back at the market, you're trying to get back to scratch, and you'll just end up making a mountain of mistakes, and next thing you know, you've lost 4 or 5 trades. So take that break at a very minimum if you don't just get up and quit for the day, because you can just make sure you live to trade another day, and you'll come back. That's the key. Don't blow your accounts. I hear from people all the time that blow their accounts in 1 or 2 trades. They're doing real good, and all of a sudden they make a mistake and then they blow their account out. Don't be that guy or that gal. So anyway, let's talk about the trade. Let me back out again. You can see the range. Here's your overnight highs. Here's your overnight lows. Generally, that's the area you're going to trade in on range days. And this today we traded mostly in that upper 5 points of this overall range, and you can see we really broke out right about in here. I would say this is where the downtrend really started here, but this is where you kind of got confirmation that we were going lower. And still, you want to be very careful about this support here. You see we went through it and we bounced, but the trend line held, and we got a second entry short and continued short on down into the 2 o'clock hour, where again we bounced here on a failed breakout and we continued to trade lower. I was a little surprised we continued to trade that low today. I really thought we'd probably eventually fill this gap and make another leg up, but it never happened today. So that's why you got to follow the price action. You know, there's nothing wrong with thinking you know what the prices are going to do, because you can get a good idea when you get used to this and you get to where you can read this chart. I really thought we were going to start a leg up here, but we didn't. But I'm smart enough to know that when it gets up here and you get the setup, you still got to go short. And that's where most people mess up. They think they know where prices are going, and then they don't do what they think they're going to do, and they get all flustered and messed up, and next thing you know, they're having losing trades. So just don't argue with the market. It is the best rule I can tell you. Just follow the price action. If it's taking you down, then go short. If it's taking you up, find the long. But don't argue with it, because you will not live very long if you do. But anyway, let's get over here. 7 o'clock came in this move right up through here. And you got a little trap right here. Normally, we're getting close to these highs. You got to figure that's probably, you got a little spike and channel up. And notice what happened here. You tried to go lower right here. Really, you got a double bottom right here. So a first entry short, and then there's a second entry short. No way you want to be going short right there. And when that breaks lower first and turns and goes out the other side, that's probably going to trap some people. So you may want to go long right there when it broke through. And you still, what I would do, you're so close to this high, I would let it break higher, and I'd drop a limit order, maybe a tick or two back, or maybe one tick above this bar, and see if it'll come back and fill you. I wouldn't wait for this bar to come all the way back and fill me. I'd want to get filled on this original bar, and if I couldn't, I'd probably skip that trade. Because you see we came all the way back. If this hadn't been right into this overnight highs, this would have been what you'd probably think is a great setup, because it's a double test, but it's such a big bar, you can't get long till way up here, and that's just way too late. You needed to be able to get in closer to down here, and you just don't get a setup here. This one was tempting because you do get a double test here, but we just came off the highs finding support, and there's too big a chance it turns up and turns back down, which it does, but it goes all the way back up here, but you don't know that ahead of time. So I only like this trade if you enter it the way I discussed. I wouldn't wait for this bar to quit and try to get long way up here right into those highs. We do come back down here and we make this double test, and then we make a higher low. That's not a bearish signal bar, but again, it's not a very good signal bar. But this is starting to look like a reversal, so there's too big a chance it ticks up and turns back down. So I think you just got to wait. Now it comes up, and notice you made that high. You test it once, you test it twice, and look how bearish that bar is. That's where you want to get short. That's a quick, easy move. And then we come down here and we make another higher low. Notice that low. This one's higher than that, and that's a fairly bullish bar. You still got a little bit of an upward bias here. I like going long there. And it looks like you're going to get a lower high, but that bar is too neutral. You do get a failed second entry long. Again, it's more of a bullish bar. It's almost a doji, but it closes in the upper half of the bar, so it's not really even a doji. It's more bullish, but it is a failed second entry long. But those don't tend to work well on range days. They're not good setups. You're better off to skip that trade. But it is giving you a chance to get short on what's probably going to be a trap on the high side. So for that reason, you may take that trade. It's and you can see it would have worked relatively easy and relatively quick. And of course we bounce, but you don't get a good signal bar here, and you don't get a high or low until way over here. So this one runs all the way back up, and guess where it turns down? Right where it's turned down all morning long. And look how bearish that is. That's a great place to go short. Another quick, easy move. And this just kind of looks like a repeat of this. Notice we bounced at that level. If you move this line up, you can see we bounced at that level multiple times. So there's still some important support right there. So, and that's a big, and this actually went lower and turned and went out the upper side. I'd probably wait on this to close, but I wouldn't have a problem going long because you got plenty of room to get out. There's a higher low right here, but that's right into the eyes. Even though it would have worked, you can't risk that. This was a failed breakout, but and this is a signal. This is your high bar on this, but you had a failed breakout here. There's a good chance it may try to go higher again. You could have taken this trade. I didn't mark it. It's probably could be trade at least marked green, but in this case, I want to see some evidence since we actually broke through the strong support. I want to see some evidence that we've made by seeing a lower high, which we do get a lower high right here. And that one's tempting too, but look at all that support. We bounced there once, twice, three times. And this is exactly why you got to be careful. It breaks lower and turns right back up. And this would have been the better place to get short, but the bar is too bullish. And this is just an inside bar, so this is like an up-down bar. And so you just don't really get a good chance to get short this time. But it moves all the way down. And where does it bounce? Right here where we've been bouncing with a nice bullish bar. And there's really a leg down, a little two-legged correction, and another leg. So this is basically a second entry long on a hidden, it's like a hidden second entry long with a big bullish bar right off the support. Great place to get long. You'd think it'd go back to the top, but it doesn't. It comes down here. Now you get a failed breakout with another bullish bar way away from the EMA. I like going long right one tick above that. And this might be that failed breakout that takes off. Doesn't turn out to be, but that's still a 7-point move all the way up there, 6-7 points. And you get a higher low here, but again, it's right into those highs. You just can't risk that. It worked, but it's just not worth trying to get long way up here. Too many times, just like right here, if you'd have tried it right here, it turns back down, and you can't risk that. And you can see that's right into a double top. It runs up here, and now you get notice we made that high. You test it once, you test it twice, and look how bearish that bar is, how far away we are from the EMA. Go short right there. And if we make a lower high like right here with another bearish bar, definitely go short right there. You might wait here. The only reason I say you don't wait here for the lower high is because you got a double test, because you made that high, you test it once, twice, and you got a big bearish bar. I mean, there's just like a lot going for that trade right there. And you might have moved this up by that point. And you can see that double test now. And then you tested it again on a lower high. And you actually get a second entry here. Notice that low, first entry, second entry, which might have been riskable because you're still near the top. You might have risked that if you had a good signal bar, but you don't. So you just got to watch it. And it runs down here, it bounces. And again, it went lower and turned and went out the other side. I like going long one tick above that. Here you might even go one tick just above that bar because you got the break of that little short-term trend line and you low. And you're down here, and we bounced along that area several times. You can see that. I showed you that a minute ago. And it bounces there again. Quick, easy move, comes up here. And notice you made that high right there. You test it once, you test it twice. Big bearish bar. I like going short there again. Another quick, easy move. And you would have got a runner on this. There's a lower high right here, but it's right back into all this support. You don't want to take that. And then we come down and we fill the gap right there. Notice that brown line was the gap for the day. You filled it right there. You actually get a failed breakout here, and there's a higher low here as well, and we're still a little away from the EMA. I didn't mark it because you couldn't get filled on this really anyway. You would have had to use a limit order, and even then I don't know that you would have gotten filled. But if you could have gotten in this one, I'd be okay with that trade, but I don't think you could have got filled on. Just make sure you got enough room to get out before you get back up straight up to the EMA. And sometimes you may not go straight, you might kind of work over, and there's just not a lot of room there. We're really playing the range though, and this is a failed breakout below that last low. But this one feels different. You can see we've been trending down for a while, so you got to be real careful with that one. When it comes back here, notice that double top, first entry, second leg down, and the second entry long fails. Doesn't matter what your signal bar looks like there. It confirms that trend. It's actually a second entry short too, and the reason it doesn't matter on the signal bar is because it's a failed second entry long. It's kind of a reversal trap or whatever, and it does confirm that trend line. So I like going short there, and you would have got a runner here that just drops on down. And then notice you bounce here. You get a first entry, come back, and then you get a second entry short right there, big bearish bar. I like going short again, right off that trend line. Another quick, easy move. That's right in the 2 o'clock hour, but it's, it's like right at 2 o'clock, so 2:01 or something like that. And that drops on down. That takes you into 2 o'clock. So that's really the only trending you had today that amounted to anything that you could call an actual trend. Well, we had a little bit early on in the 7 o'clock hour, but the rest of the day was all sideways. And the good thing about today was most of these turns down were consistent, and a lot of them on the way up were consistent as well. It really was more consistent off this line than it was this one, but this is where you get more touches with the including closes, but you really got a lot of support right across that level, 309 level. So you really just kind of had to watch both those lines and kind of see how prices reacted. You can see it turned up there more times than anywhere, and you got a little failed break here and a little failed break here, and then we pushed on through here. So you might have even played it at that point as the day progressed. But most of you've heard me say it many times. I like these kind of days because they're so predictable. I mean, you can see there's 1, 2, 3, 4, 5, 6, 7. There's 8 really easy trades, maybe 9 here, 8 on this range, and really these others that are green, you can almost count them as well. So 9, 10, 11 trades right there, and if you just got 2 or 3 scalps out of those, I mean, if you can't find 3 scalps out of this today, it's just so predictable, and this kind of day is generally hard for amateur traders because they just don't understand price action, and they get long and it turns down, then they get long up here and they get short up here, and they just keep getting whipsawed, but that's just because they don't understand how ranges work. You got to do just the opposite. You got to try to get short up here, and you got to try to get long down here. And you can see if you bought any one of these reversals, basically anything that reversed off of or broke through and then reversed, you had a winning trade. And if you brought anything that turned down up here or even broke through and then turned back down, you had a winning trade. You couldn't hardly lose. So the only one that really failed was right here at the end. And eventually you're going to get a failure, but if you'd taken all the rest of them, you could have had a bunch of winning trades here. So just keep that in mind. I'm just trying to think if there's anything. There's not much else really worth talking about today, but that's the key to ranges is you buy the lows, especially when it's consistent like it was today, and you sell the highs. And if you get a breakout, you probably want to try, like here and here, you probably want to try for a runner. And probably here or here, you probably want to try for a runner if you entered those. Because those turn out to oftentimes be major highs or lows for the day. And this is one you're hoping you catch the major low. Even if you don't, you still get a nice runner that runs for 7 points here, real easy, quick, easy 7 points, and you know where to exit right up here. And I mean, it's just the easiest trades it gets. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Again, I'm going to be gone. I'm taking off Friday, so there's going to be nothing Friday. I haven't decided what I'm going to do Thursday yet, if I'm going to trade Thursday or not. I'll let you know by tomorrow. So Thursday I may not come into the office. I'm thinking about coming in that morning, probably do the mid-morning, post the mid-morning chart, and maybe trade for an hour or two and then cutting out. So going home and getting ready for my trip. But anyway, I'll let you know tomorrow for sure what I'm probably going to do on Thursday. As of today, just assume it's probably going to be a regular day Thursday, but I just hadn't made up my mind yet. Definitely nothing on Friday. I'll be gone. I'll be leaving early Friday morning, and won't be back and won't be any trading on Monday because I won't come back till late Monday. So I won't be back again till Tuesday. So just put that on your calendar in case you're looking for your chart lesson on Monday. Generally won't affect anybody here Friday because I don't do chart lessons on Fridays anymore. But I'll give you more information on that tomorrow most likely. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.